Stop losing money, the secret to a profitable trading strategy. Welcome to this video made specifically for novice traders. Are you tired of seeing your hard-earned money vanish in the markets? Do you feel overwhelmed by the complexities of trading? Don't worry, you're not alone. Today we'll break down the secret to building a profitable trading strategy in a clear, practical, and easy-to-follow way. Let's transform how you approach trading so you can stop losing money and start seeing consistent results. Trading doesn't have to be intimidating or confusing. The truth is that successful trading isn't about luck. It's about having the right strategy, mindset, and approach. Let's start by addressing why so many beginners fail and how you can avoid the same pitfalls. Did you know that a majority of traders lose money in their early attempts? This typically happens because they dive into the markets with unrealistic expectations, impulsive decisions, and little to no preparation. Those flashy get-rich-quick schemes you've seen on social media, they often lead to disillusionment and frustration. The first step to reversing your losses is understanding where you're going wrong. Trading is not about gambling or guessing. It's a skill that requires planning, discipline, and patience. With the right approach, you can shift from losing trades to making informed, profitable decisions. Your mindset sets the foundation for your success. Let me ask you this: do you approach trading as a game of chance or as a skill you need to master? Successful traders treat the markets like any other profession. They study, they prepare, and they practice discipline. The two biggest enemies of a trader are fear and greed. Fear makes you hesitate and miss opportunities, while greed pushes you to take unnecessary risks. Striking a balance and keeping your emotions in check is critical. Remember, trading is a marathon, not a sprint. Slow, steady growth will always outperform impulsive, high-risk moves. So what's the secret? It's not about finding a magical indicator or chasing market trends. The secret lies in creating and consistently following a well-thought-out trading strategy. A profitable trading strategy is like a business plan. It provides structure and ensures you don't fall victim to emotional decision-making. Your strategy should focus on minimizing losses while maximizing gains. This includes understanding risk management, making disciplined decisions, and setting clear entry and exit rules. The best trading strategies are simple and effective. Complexity doesn't equal success. In fact, overcomplicated strategies often lead to more confusion and more mistakes. Start by testing your strategy in a risk-free environment. This is called backtesting. Use historical data to see how your plan performs before you start using actual money. Adjust and refine it until you feel confident. One of the golden rules of trading is to protect your capital. Without protection, you can't survive in the markets long enough to see success. This is why risk management is absolutely critical. Always determine your risk-to-reward ratio before entering a trade. A good starting point is a 1-to-2 ratio, meaning you aim to make $2 for every $1 you risk. Additionally, never risk more than 1-to 2% of your account on a single trade. This way, even if you experience a loss, you'll have plenty of capital left to recover. Avoid over-leveraging, which is when you risk too much in pursuit of quick profits. It may seem tempting at first, but it is one of the fastest ways to lose money. Remember, slow and steady wins the race. A great trading strategy starts with understanding when to enter a trade. This is often the part that confuses new traders. The key is to avoid impulse buying and instead look for technical signals that align with your strategy. One simple method is to look for support levels, a price point where the market is likely to reverse upward. Similarly, pay attention to chart patterns that suggest potential opportunities, such as breakouts or trends. Don't worry if this sounds overwhelming. Start small, practice, and the process will feel more natural over time. Knowing when to sell is just as important as knowing when to enter a trade. Many traders hold on to losing positions for too long, hoping the market will eventually turn around. On the other hand, they often sell winning positions too early due to fear. The solution? Use predefined stop-loss and take-profit levels. A stop-loss automatically exits a trade if it moves against you, while a take-profit locks in your gains once your target is reached. Having these in place removes emotion and ensures you stick to your plan. Consistency is the name of the game. You've probably heard traders boast about a single big win, but those wins can be few and far between. The real secret to long-term success is small, consistent wins that build over time. Think of trading like planting a tree. It takes patience and care to watch it grow. But if you're consistent, you'll eventually see the fruits of your labor. Emotional trading is one of the biggest reasons for losses in the market. Let's say the market moves unexpectedly. If you feel stressed, frustrated, or overly excited, you're more likely to make impulsive decisions. To overcome emotional trading, focus on sticking to your strategy no matter what happens. Trust the research and preparation you've done, and resist the temptation to deviate from your plan. Discipline is what separates amateur traders from professionals. Imagine you're on a losing streak. It's easy to get discouraged and start making reckless trades in an attempt to recover losses. However, sticking to your strategy, despite the temptation to chase losses, is what will ultimately lead to success. Create a set of trading rules and hold yourself accountable. For example, you might decide to limit yourself to 2 trades per day, or only trade in certain market conditions. Discipline takes time to build, but it's one of the most valuable skills a trader can have. New traders often make the same mistakes: over-leveraging or risking too much money on one trade, trading without a clear plan or strategy, falling for hot tips or unreliable advice, overtrading, a problem caused by impatience or greed. Recognizing and avoiding these common pitfalls will give you a significant advantage. Research is the backbone of successful trading. Whether you're trading stocks, forex, or cryptocurrencies, it's essential to understand the market you're participating in. Stay informed about financial news and look at key economic indicators. While analysis is important, there's such a thing as analysis paralysis. Don't overthink or second guess. You don't need to predict every move perfectly. Focus instead on the setups and opportunities that align with your strategy. Many beginners fall into the trap of using too many indicators or tools, thinking it will give them an edge. In reality, simplicity is more effective. Choose 1, 3 indicators that you fully understand rather than cluttering your trading screen with unnecessary data. For example, moving averages and support resistance lines are great starting points for novice traders. Patience is one of the most underrated traits of a profitable trader. You don't need to make trades every day. Sometimes the smartest move is to sit out and wait for high-quality opportunities. Impulsive trading, or chasing the market, leads to poor decisions and unnecessary losses. Quality always beats quantity. Keeping a trading journal is an excellent way to track your progress and discover areas for improvement. Write down the details of every trade, entry and exit points, profit or loss, and any lessons learned. By reviewing your journal regularly, you'll start to notice patterns in both your successes and mistakes. Here's the thing: every trader makes mistakes. What separates successful traders is their ability to learn and grow from those mistakes. A failed trade isn't a loss, it's an opportunity to improve. Embrace setbacks as a natural part of the learning process. With every mistake, you're one step closer to mastering the art of trading. Let's finish with a simple example of the trading process. Research and analyze the market, identifying a potential setup. Use your strategy to determine the best entry point. Set your stop loss and take profit levels. Never skip this step. Enter the trade and let the market take its course. Exit the trade according to your plan, whether it's a win or a loss. By following these steps, you'll remove emotional uncertainty and trade with confidence. Conclusion. Congratulations! You've just learned the core principles required to create and execute a profitable trading strategy. We've covered a lot today, from risk management and emotional control to discipline and building a strong foundation. Remember, successful trading isn't about quick wins or luck. It's about consistency, preparation, and following a plan. Take the tools and knowledge you've gained here and start incorporating them into your trading journey. Your path to profitability starts now. The markets will always be unpredictable, but with the right approach, you'll be better equipped to face any challenge. Thank you for watching, and here's to your success as a smarter, more confident trader. If you found this video helpful, don't forget to like, subscribe, and share with others starting their trading journey. See you in the next video.